gentlemen, it's a fine day as far as Dalal Street is concerned. Strong gains on major indices like the Nifty, the Bank Nifty, in particular the IT index, and of course across the board rallies in many stocks. The reason is fairly simple and not far to guess. There is considerable thaw in the India-US fight, clash, whatever you might call it, as far as the tariff war was concerned. A reconciliatory tweet by US President Donald Trump, and an equally warm response from Indian Prime Minister Narendra Modi has fired up bulls on Dalal Street. The Nifty 153 points higher. This is the 7th day of gains as far as the index is concerned. Remember, in the past 5 days gains were minuscule, but a gap up today, and post the gap up the Nifty is consolidating well above the 25,000 mark, in fact now at day's high, and that goes on to prove that this rally has legs. What you see, the Nifty is now at its highest since 22nd of August, and the rally within the Nifty is led by IT stocks and banking shares. No stopping the Nifty IT index. Second day of very strong gains, almost 1,000 points higher, 2.7% up on the Nifty IT index, powered by a very strong fundamental move that Infosys has come up with, announcing a buyback. So Infosys again up 2% after yesterday's 4% uptick, 23 points to Nifty's tally. TCS is adding 16 points to Nifty's total. HDFC Bank, SBI, ICICI Bank adding 10 each, and HCL Tech putting in another 10 points. So very strong momentum on the Nifty, led by IT and banks. And if you look at the broader markets, well, across the board you see a lot of very strong performances coming up. The bulls in full control of sentiment. 1900 shares on the National Stock Exchange are in the green, compared with just 600 that are now in the red. As I have said, the rally is led by the IT index. All 10 stocks in the index gaining ground, including Oracle. The rally is led by Oracle Finance because its parent in the US announced a stunning set of numbers. Parent Oracle was actually up 27% in after our trade on Wall Street. PSU banking index in top form, 2% higher. Midcap select participating with equal fervor, 1.6% higher. Small cap index up 100%. The NSE 500, the broadest measure, is also up almost 1%. 400 out of 500 stocks in the NSE 500 are in the green. And when you look at the new highs in the market, there is Indian Bank at 689. There is HBL Engines at 865, GMDC at 531, Maruti, Muthoot Finance, Bosch. These three have already staked their claim on the record high list over a period of time. So these are the momentum stocks that are moving up the market, and of course a very large deal happening on Kotak today, about 1.2% stake changing hands, 1980 for you, 18% higher. Strong move by Vikram Solar, the top traded counter on the National Stock Exchange today, 7.5% higher. Already 1700 crores worth of trade on Vikram Solar has happened. This is a recently listed company. Post its IPO, the quarterly earnings were in top form. Profit rising about 3-4 fold, and sales doubling in the quarter gone by. So this is how the market is at this point of time, and we'll be shortly joined by Mr. Abhay Agarwal, founder and fund manager at Piper Serica PMS. This is a very well-known fund which offers quality portfolios to long-term shareholders. Namaste to you, Abhay ji, and a very warm welcome. I'm taking it as good luck that's rubbed on the market, because you were supposed to come on the show. A very strong rally on Dalal Street. How do you read sentiment today, Abhay ji?
Yeah, thank you, Shalji, first of all, for having me on the show. And I must say, I was just listening to your market briefing just now, and it was so good that after after listening to you, I don't need to read any newspaper, watch any other channel, because you covered so beautifully everything that is happening in the market. So my compliments to you. Shalji, I think, yeah, good day for us to be talking. I think market has been strong, recovering for last 6 days. I think the fundamentally, I don't see any problem with the Indian industry, Indian economy. I think our macros are very well sorted. The FPI selling consistently was putting pressure on the market, Shelji. And I think that was happening because there was this worry that what can the tariff situation escalate to? How worse can it become? Because it was clear that India is not going to back down. At the same time, the geopolitical relationships were resetting. So the worry was that could it lead to further tariffs? And not only tariffs, if India is shown by the US government as a party to the Ukraine war, then will it lead to some sanctions? So I'm just sharing with you the discussions that I was having with some foreign investors who were looking at India from that perspective. And I think they were all looking to take some chips off the table, do some profit booking, sit on the sidelines. It's not that they were abandoning India, and I think we saw that FPI exodus leading to India's place in the MSCI index slipping to third place after a very long period of time. We had gone up to almost 20% share in the MSCI emerging market index, and that has now come down to 16%. But the good thing is that with this kind of recent tweets that we have seen, I think there is some confidence reverting with the market participants, investors, especially foreign investors, that look, things are probably not going to get worse, for one. And secondly, there is a possibility that some reconciliation will come into place and both parties will sit together and resolve it. At the same time, I must tell you, Shalji, there's a lot of respect for India for not backing down, not getting bullied. So I think that is to our longer term advantage, will give us more respect in the global markets. So I think all in all, Shalji, I think the rally that we are seeing today and over the last couple of days, I think is purely driven by FPIs coming back on the back of lesser threat of tariffs right now.
Yes, I think that's very well explained. Although we'll be waiting eagerly about the FII numbers that will be unveiled late evening today for today's purchases. But yes, I think there is a change in sentiment and there is an off ramp available for both nations to sort of put this behind themselves and then move on. Abhijit, your job is to pick out quality stocks at a time when the market is muted or falling. Now tell us, you were last with us on July 25th when you mentioned Sharda Cropchem as one of your additions, and the stock went up 12% the next day. We take it as your lucky streak, which will now extend from whatever discussion we hold from this moment onwards. Tell us about new additions in the portfolio. Tell us about places where you have booked profit.
Yeah. So, Shalji, I think the good thing, first of all, I would like to say is that in this market, there is no dearth of opportunities. In fact, the more research we do, more young companies we meet, we are very excited to see some amazing work happening, especially in new age sectors, where young promoters are coming in and very growth oriented approach to business, focusing on innovation, focusing on customer service, high quality product, building a growth business for the long term, hiring great set of people. So I think if one was to not get too worried about what the Nifty multiple is and whether the market is expensive or cheap, there are plenty of opportunities available even now for investors to build multi-bagger portfolio over the next 4 or 5 years timeline. Now, where we are looking at opportunities is continues to be, Shelji, in two spaces. One is the EMS space where we see companies continuing to scale up. So our portfolio companies like Sirma, Keynes, Amber, Dixon all have continued to do well, and we believe that these are multi-year stories, or maybe a decadal story, that these companies will continue to become stronger and stronger. Second space that we have actually added one stock also in the model portfolio. It's not a buy recommendation, but since we have added it and it is public knowledge, is a small company called Senoris Pharma. And we like Senoris because again, focus on innovation, focus on building an international business. They have presence in CDMO also. So we believe that companies like these will outperform the indices. And another company that we had added, which has already done well, is car trade, though it is down today. But otherwise, if you look at it, it is a company that is, climbed pretty well over the last 6 months. So again, this is a company that owns OLX, and it is a generator of leads for pretty much all large auto companies. So again, these are companies that we are seeing as very long-term bets, not short-term trading bets. What we have exited is one small bank, and also brought down, book partial profits in some of the companies that had gone up. But again, I'll say it that, whatever research we are doing, we are seeing some amazing opportunities that will reward the long-term investors in a very patient manner, Shalji.
Okay, let me just focus on the kind of returns that Piper Serica has come up with. They are phenomenal over the last 5-7 years, in particular over the last 6 months. What you see is a 24.8% growth in Piper Serica leader portfolio versus an 11.5% uptick on the Nifty. And if you look at the last 3-year performance, again, a 500 basis point beat over the Nifty. A 7-year performance is at 17.3% CAGR, 5-year performance is at 19.0 CAGR. This, of course, is great stock picking ability, and of course, holding them over long periods so that you get multi-bagger returns. At this point of time, Abhayji, what are the 2 or 3 filters that you are employing to get hold of quality stocks at reasonable valuations? Where is your net thrown over the Dalal Street?
So I think we are very focused on growth stocks right now, Shelji, because what we want to do is back high quality growth companies. So we want to be convinced that the company we are looking at to add to our portfolio has a potential to grow 30 to 40% year on year for next 4 to 5 years. And that means that they are becoming leaders in an emerging space, and that support from the industry growth plus their own management skills is leading to that. And the growth is not dependent on capital infusion. They can use their own money to continue to grow. So the margins expand, the return ratios, return on capital employed, return on equity improves. So I think there are opportunities like that we are backing. Now, what happens is, Shelji, is that these kind of companies are rare. So they will never be cheap. So I think a lot of investors who are looking at traditional valuation multiples may miss them. But what we look at is the simple ratio that, look, if I am investing in a company which has a market cap of 10,000 crore right now, can it become a 50,000 crore market cap company over next 7-8 years? And I think if the answer is yes, then we would not worry too much about its current valuation, because historically that we have seen is that high growth companies are valued at a premium. So we are willing to pay that premium, Shelji. We are not worried about. So as long as the PEG ratio is sensible, say about 1.5 times, 1.75 times also, but we see a long runway to growth, we will pay that PEG ratio for these companies. So again, growth. I think that is where investors in equity make their return from. And these are young companies, so they go through cyclical technical corrections. And that is why only with conviction you can continue to hold them as they correct also. So right now, and I think for the future also, that will continue to be our mantra, Shalji.
Yes, I think buy small and wait for it to grow up into a multi-bagger is what many fund managers aspire for. and that is something that Abhay has done consistently over the last 10 years within Piper Serica. Uh, Other issue, Abhay, that is facing a lot of fund managers, including you, is this stunning outperformance from gold and silver. 45% for silver and 43% for gold year to date. क्या कीजिए, मतलब पूरा स्पेकुलेशन उस तरफ लगा हुआ है. ज्वेलर की दुकान में कोई जा नहीं रहा कुछ सामान खरीदने. रैली थम नहीं रही. मतलब how do you factor this in your own exercise when you try and put in some money that everybody is betting on gold and silver, and I haven't even bought crypto into the equation because that's an illegal market for us.
No, I think that is what we call, Shalji, सब alternate assets हैं जिनको कहते हैं. तो equity is one part, but it doesn't mean that an investor can make money only from equity and no other asset class. Typically we have seen cycles where different assets outperform for 4-5 years, and gold or silver have been like that, that they run up suddenly from nowhere, surprise everybody because they are under-owned by central banks, they are under-owned by investors because they haven't done anything for 8-10 years. And they suddenly rally, and that rally takes them, what we call it, into hyperbolic stage. So I think parabolic stage में है अभी ये दोनों commodities. Difficult to say कहाँ पे रुकेगा, but gold looks like will probably get to $4,000 in the international markets, and silver will get to $50. So I think it is highly possible just based on the demand from actual users. Again, I don't think these assets can be compared to equity investing. Equity investing is a different thing. You're investing in growth companies that are growing earnings, beating inflation. But at the same time, these alternate assets, as we call them, have place in everybody's portfolio, whether in physical form or digital form through ETFs. We have seen a lot of our investors have asked us to add, and I think the one good thing about the PMS structure is that we have the ability to work with our investors to add something in the portfolio that they would like to add. So we have, over last 6 months ago, I think we had added silver ETF to some of the clients' accounts, and that has done well. And some clients already had gold ETF that they are continuing to hold. So I think it is, I don't see any loss in these things. It's just that both these asset classes move and stop. So if you come in late into the rally, then your risk is that you may not make any money for 3-4 years before they take off again. But I don't see them correcting or going down, just based on the central bank demand right now, Shalji.
Okay, fair point. So that's the state of play. A bit of profit booking today on gold and silver. Yes, gold is flat, silver is still up 0.4%. Abhay, this GST rejig that happened has fired up auto stocks. Car trade has been a great trade for you, although it's an agglomerator of all demand. But apart from auto, what are the few other beneficiaries that you feel will provide quality uptick to medium-term shareholders as far as the broader sectoral performance is concerned? And apart from car trade, is there any auto or auto ancillary bet that you have?
Yeah. So I think GST benefit, I think, will be wide because this rationalization, I would call it, rather than reform, was long pending. So anything that puts more money into the hands of the consumers, anything that increases their buying power will lead to higher consumption. And two of the things we saw earlier in the budget, the government cut taxes, which was a very positive move. Then we saw RBI cut interest rates, which was another positive move. Both these things gave money back to consumers so they can spend more. And now third thing, with GST, the cost of consumption has come down. So I think all these three things put together will fire up consumption, because India is a very aspirational economy. हमारा आप देखेंगे अभी जो young consumers हैं, they are quite aspirational. So, and they're not scared of investing. So अगर if they have the buying power, they will consume. So that will be across sectors. Discretionary, if we see autos, definitely auto rate have been announced. So people are just waiting for September 22 to come so they can start booking orders, especially pre-festive season. So the timing is also very appropriate. I think for non-discretionary, things like FMCG products, and also this cut in rates is very welcome. I think there will be finally a volume pickup for the FMCG industry, which has been missing for last 4 or 5 years. And other sector that will benefit Shelji, which people are still not talking about too much, is the whole unsecured lending, microfinance sector, which has gone through a very tough time over the last 2 3 years. But we are seeing positive green shoots, and I think as liquidity at the ground level, bottom of the pyramid improves, some of the microfinance companies and some of the unsecured lending companies will also do well, because two-wheeler financing companies, SFBs, they will also see a ramp up in their pricing. So I think the whole ecosystem built around consumption and facilitation of consumption will do well. So I think investors will be spoiled for choices, once they see these numbers coming up.
Okay. Uh, Abhijit, all the hallmarks of a good rally are in place.
Yes.
We've had a income tax cut in February, an interest rate cut about 100 basis points in the last 4 months via the central bank. Now this GST rejig, a great monsoon, and of course more money power in the hands of potential consumers. Now what? Do we see a calendar 2025 record high for the Nifty, or is it much further away?
No, I would bet on the first part. I think we are not very far away from a new high, number wise also. If you look at it, we are talking about a 4 5% rally from here. And I would believe that with the FPI's return to the market, with the festive season sales coming up, my bet is that, somewhere November or early December, we are gearing up for a new high. And you have seen it, Shelji, success brings more money, so momentum money comes in once you hit the technical barriers, though I'm not a technical expert, but I've seen this in the past, more returns brings more money into the system. So I think that is what we are gearing towards. The rupee has already depreciated to 88 levels. I think that is pretty much the higher end of RBI zone. So for FPIs returning, also it is a good time that they are getting the rupee at a depreciated value. We are seeing good interest from foreign investors already in our conversations, looking for investment ideas. And India will be a growth market for all foreign investors for the next 10 years. So I think just the technical and fundamental factors in the near term tell me, Shelji, that we are gearing up for definitely a new high this calendar year.
ओके आपके मुंह में घी शक्कर और जितनी जल्दी आए उतना अच्छा. The other space which is perhaps also absent from your portfolio is cement. We've had a GST rate cut, 28 brought down to 18. Is this an attractive space post 3-year consolidation phase?
No, it is a good space from the consumer demand perspective. But the problem we have had with this space is that there is a lot of capacity, already there. So if you look at purely demand supply situation, though the demand will increase, the supply is also increasing and has increased in the past. So ideally, you would have expected that supply addition would have stopped and demand picks up, and the companies get buying price power. But pricing power has been missing from this industry despite the demand going up. So I think till we see the pricing power coming back with the cement companies, we will not want to buy right now, though it is a space which will naturally grow along with steel, aluminium, everything that is required to support the infrastructure and real estate boom. But I think the problem has been the demand and supply. There's too much of supply, so the smaller guys have to get consolidated. The larger companies have to stop adding capacity. I think only then the buying power will, the price power will come back.
Fair point. What else bothers you at this point of time, Abhayji? A lot of stuffs are working in India's favor, particularly on the macro space. But for this tariff war, things were going very smoothly, and we had very easily absorbed this very high intensity selling by FIIs also. But anything else that keeps you awake at night?
I think what is worrying me is that the bottom of the pyramid does not have access to credit the way that the top and middle of the pyramid have. And I think this situation started last year, early last year, when RBI suddenly started tightening the flow of credit to the microfinance companies from NBFCs and to NBFCs from banks. And the impact of that was brutal. It was felt right up to December last year and in first quarter this year, where we saw the microfinance companies lending portfolio fall almost 80,000 crores from 4,50,000 crores to 3,70,000 crores as per MFIN data. So what worries me is that unless that bottom of the pyramid, which also includes farmers who need money regularly for buying farm equipment, seeds, fertilizers, if they do not have access to credit, we will have very lopsided growth. So I am hoping that as the next set of reform after what we discuss, income tax, interest rate cut and GST cut, I hope the next big reform from the government, from RBI will be how do we make frictionless, easy credit available to deserving borrowers who are borrowing against cash flows and do not have any assets to give. Because unless we do that, the growth will continue to be very lopsided and the rural economy will not participate in the urban growth. So that is the thing that does not, I would not say worry me, but I would like the next set of reforms around that because that is very important for improving entrepreneurship at the grassroots level and making sure that our bottom of the strata people are also participating in growth, Shalji.
Abhayji, I see through your I see your presentation, and it says creation of new industries with government support, semiconductors, electronics, CDMO, defense equipment, and renewable energy. Of course, you are very big on CDMO because pharma and healthcare is the highest weighted in terms of sectoral preference. But for the benefit of our viewers, could you please share the names of companies that you've invested in semiconductors? Electronics is well known, you are very big on the EMS space, defense equipment and renewable energy.
So in semiconductors, indirectly, we have invested through two companies. One is actually three. One is Keynes, which is Keynes Technologies, already started its OSAT plant in Gujarat. It's a 3,000 crore rupee plant, which is half of it is subsidized by the government. And this plant will start selling very soon. So Keynes, even in the National Semiconductor Day that Prime Minister inaugurated and talked at last week, was a major presence, and their commitment to semiconductor space as a next growth, I think is for everybody to see. So Keynes is one name. The second is Syrma SGS. Syrma is setting up a PCB board plant in Telangana with the Telangana government support. It's almost a 900 crore plant that will manufacture PCBs in India, which is required by the semiconductor industry and also electronic industry. The third is Amber. Amber has recently raised a private equity round earlier this week in its subsidiary called Ilgin Electronics, and Ilgin is already a leader in electronics space. So I think different EMS companies we are seeing are building their presence in the semiconductor space. In CDMO, as I said, Divi's continues to be our core holding. We are not going to change that. We have added Cenorus recently to add to that. In solar power and renewable, we have been lagging. We really haven't made a bet yet, but we are looking at that space. I think we would like to see more opportunities because right now the financial models of renewable energy companies are not very clear to us. So maybe we will wait for 6 months before we add another name in that space.
Right. As usual, Abhayji, it's such a pleasure to speak to you, and you are also a lucky mascot. Whenever you come on the show, the markets really perk up. Thank you for all the intelligence and all wonderful common sense you shared in terms of investing. Have a nice day, sir.
Thank you very much, Shalji, for having me.
That, ladies and gentlemen, was Mr. Abhay Agarwal, the founder CEO at Piper Serica PMS, a fund that has created immense wealth for long-term shareholders, and the schemes are positive on the semiconductor space, pharma space, as also in the auto ancillary space. Thank you for watching. I hope this conversation was interesting for you. Stay glued to Business Today Television.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today